You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
Hello, everybody, and welcome to the Option Block. It is I, Andrew Giovinazzi, here doing a bit of hosting on the show today. Here's it's your bi-weekly show. I guess we're up to 500 and something shows now, with a dose of option wit, a dose of option wisdom, and if we're lucky enough to have my co-host Mike Tosaw here, we will also get a dose of country wit courtesy of the man from St. Charles. So is the man from St. Charles here?
Of course he is. Where else would you rather be than right here, right now, on the live broadcast of the Option Block?
I think that is absolutely fantastic that you are here today, because you know what? It would have been an awfully let's just call it quiet and lonely Monday without you. How are things going? You haven't been around lately. Are things okay? Are you an okay person? Are you well?
Oh, I'm very well. We just took the kids to St. Louis for the weekend, and it was a lot of fun. So we just took a spring break, wanted to get away for a couple days. And if anyone ever goes to St. Louis, a couple of things I thought were awesome was the City Museum. Great place. I have a 7-year-old and a 9-year-old. Highly recommend it. And the other thing that I thought was really neat is I'd never been to the Arch before. I've driven through St. Louis on at least 20 occasions going to college, but I'd never actually been to the Arch. So we're going to the Arch, and just me being used to going to good old downtown Chicago, we're like, we got to park somewhere. There's a parking garage. So I'm getting ready to just shell out maybe $20-30 in a parking garage. So we go to park. We're there for maybe an hour and a half while we go do the Arch, and I paid $3 for parking. Made my whole weekend.
$3?
$3 for probably about 2 hours in downtown St. Louis.
I don't even, all I can say is the Midwest is still a bargain. Although the only thing I could say about Maine is it doesn't cost you anything to park in Maine, because Maine, we have a lot of parking.
Well, so I guess I'm used to Chicago.
Oh yeah, it's like $40 a day.
Right. So that's kind of what I was expecting to shell out. They said $3. I'm like, you sure you didn't move the decimal point? But it was $3. I couldn't believe it.
So you could have taken the kids to Five Guys instead of McDonald's then, because you made all that extra money from your from parking. That's pretty fantastic.
St. Louis was a phenomenal place, I have to say. Everything was very inexpensive. I was just shocked. We thought we'd get away for a weekend, but we were just shocked by how cheap everything was, and it was a good time too.
Because I've been to St. Louis, I think, twice in my life. There's like a little Italian district, I guess, that Joe DiMaggio was from. There's a little Italian hill there. I thought the food was pretty good. And my gosh, this is like 20 years ago. And then I just kind of drank beer. I really haven't done much else besides that in St. Louis. You sounds like you had much more educational and enlightening pastimes.
Yeah, it was with the kids over the weekend, so not too many Budweisers.
Well, I'm glad your vacation was a success. I'm glad that St. Louis is I guess it just wins the price performer bargain. And I guess now that the intros are all done, and welcome everybody to April the 4th. I guess this was the first show on the Options Insider radio conglomerate now that it is. But I think it's time that we close this segment now that Tosaw's here and he is happy and healthy, and we will jump right into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
Hey, everybody, and welcome to the Trading Block. This is part of the show where we actually look at what traded today. And all I can say is if you were looking at what traded today, there wasn't a whole lot catching here. I'll since Mike is here and he's fresh from St. Louis, I'll see if he had any action, although I know his once favorite, we'll just open it with Apple just because Mike is here. That once thriving stock has had a little bit of a move lately. What do you make of all that, Mr. Tosaw?
Well, I think there's a lot going on with Apple. There's something to where they say that there's no such thing as bad press. And I think one of the things that actually has helped it that people may or may not agree with me on is I really think that FBI thing, it's in the news a lot. And if there's really no such thing as bad press, some people felt that was good. Some people felt that was bad. But nonetheless, people were talking about Apple a lot more than normal because of the FBI probe. And then now it's dropped. That could technically be a good thing, a sigh of relief for people, whatever the case may be. But Apple did get a lot of press from it. And I think that's one thing with which it's giving it a run. Also, earnings are coming up in about 3 weeks on Apple, I believe the 25th. So we could be having a little bit of a run up into earnings with some type of an expectation there. I don't see it going too much higher, but if we did go back down to the 100 mark again, I would be interested in possibly picking up some deltas on it. I had a little bit of a position on it, and then took some deltas off the table around the 110 level. But I'd like to see it come down again before I dip my toe in the water on the beloved fruit company.
I know it's CME. I think it's going to regain its status as the most valuable utility on the planet again. When they have earnings and they go, okay, we made another bucket of money. It's growing, but we don't have any new products. So I guess we're in a alignment on what those earnings might say, since we're both looking for them to jump into a new market somewhere. But also it makes you kind of feel like, wow, it's kind of tough to hack my iPhone because, well, the feds can't do it.
That's true.
They gave it to somebody with a really big crowbar and I guess got all the data out of it. But the fruit company looking good today, and I would say Facebook not looking very good today. It was, again, touching on all-time highs. I don't know if you're a Facebook fan. But the stock down $3.50 on some negative comments. And I mean, I was looking at, with Facebook down and Apple up, they kind of almost cancel each other out in the Qs and in the NASDAQ. But other than that, the market just selling off a little bit today. Volatility up a little bit today. I could give myself the spot for vol where, those volatility futures have been very expensive relative to the cash. And anybody that trades VIX or any of the vol products knows that really is the key indicator, the key value that you look at if you're going to trade just straight volatility products and avoid the indexes. And we had a little bit of a markup today from the weekend. They just really smashed stuff on Friday. And also the vol futures popped a little bit. But the reality is we have if you had to guess the realized volatility of the S&P 500, Mr. Tosaw, what would you guess? The 10-day realized vol, if you had to throw a wild number out of there.
16.
16 would be high by a factor of 2. The 10-day volatility in the SPX, get ready for this, drum roll, is 7.06.
Away.
Yeah. 7% vol. 7% realized vol in the S&P 500.
Wow.
It is not moving anywhere fast. So again, just the way the VIX is kind of set up, you get a little slide in the underlying, especially when the vol is this low, it moves up easily. The vol futures absorbed most of the rally though. So we did get a little rally. Let me see where that did. That April future close above 16 in VIX. I need to make sure and check because I don't think it did. The April, it tried 1594. I am a fader of that 16 level. I just don't think it's going to hold on. And the reason why is whatever made the market volatile in the first place seems to have gone away. So from a vol point of view, biotech has been looking pretty good lately, very strong. Some of the kind of more old line companies looking okay, like Apple, but a strange little sell-off in Facebook. Somebody was worried about their first quarter, and that was enough to sell it off from the highest today. So again, kind of a weak, low-volume day. But switching gears on the trading block, who do you think won the March Madness poll? The finalists were TradeKing and Interactive Broker. TradeKing being the more hands-on, kind of touchy-feely platform, and Interactive Brokers, a little more electronic, not quite as touchy-feely. Who do you think won the best broker poll?
I would have to say that given the choice between the two of them, I know I have some inside info that TradeKing was winning, but even given the two of them, tough match as it may be, I'm going to say that TradeKing pulled it off.
TradeKing did pull it off. Although we have a lot of clients that like IB. They like what the platform does. TradeKing won. And the drawing winners will be announced on Thursday's option block.
Ooh, that's exciting.
I know, huh? Now I know our the producer in the studio. I don't know if she is live or not, or if she can confirm that Longo will finally be back. Okay, everybody, I just want you to know, since it is the spring, okay, and springtime means that Longo is out at yet another conference. And let's see, is the conference in Chicago, Mike? Or do you think it's in a sunny tropical paradise?
Well, I think it would have to be a sunny tropical paradise, seeing as we did have snow flurries today in Chicago on April 4th.
Exactly. He is in Puerto Rico for the SWAN OIC, or the SWAN, what is it, CIO Risk Conference. Wow. Which I find like every other week, the guy is in a sunny tropical paradise. Sebastian was with him a couple of days ago. Or 2 weeks ago, and in Florida. So I guess I just have the wrong job somehow. Although I used to go to both. I used to go to all those conferences back a long time ago. So, they're fun. They're fun, and when you live in Chicago, they're really fun because it's a lot nicer. So, be that okay. So let's move on to a couple other topics here. Now, if you had to guess, okay, let's do another thing. Option exchange market share review. This is an esoteric thing. There used to only be when I was trading, there used to be only really 4 exchanges. There was the Amex, there was the Philly, there was the CBOE, and then there was the PCX. And I traded on 2 of those floors. However, the ISE soon came along, and with it, about a zillion other electronic exchanges. Nearly all the exchanges that were added since are all electronic. Now, the funny thing is, if you had to guess what's the number one exchange by volume?
I will go with the CBOE. Will be the hometown heroes.
You are correct, with 47 million contracts a day, it looks like. No, I'm sorry. That was for March, the month of March. I go, wow, 47 million. That'd be a lot. The next, now if you had to guess, the exchange at the bottom of the list, I've never heard of this. I guess it's the Mercury MCRY, trades 400,000 contracts in March 2016. All I can say is they have 0.13% market share. Why are they there? Okay, I have no I have no answer for that. Oh, and by the way, the exchange that's actually winning the market share total now is the PHLX, by the way, because they have those high volume discounts for big blocks. So the PHLX is actually leading market share with 51 million contracts in the month of March 2016.
Wow.
Can you believe that?
That if you'd have told me that 10 years ago, I would have been surprised.
Yeah, 10 years ago, you thought they were getting ready to go out of business. And
yes, I remember thinking that.
Yes, and I think Citadel actually bought a stake in them, and so it's no surprise that somehow a lot of volume is now going to is somehow ending up on the PHLX, especially a lot of block volume. So when I do, unusual activity, I usually see routinely the PHLX has a bunch, or really, close. I would say almost a majority of all the block trades that go up. It really, they whatever they've done, they've certainly made things happen. There's a couple of other things too, Mike. OCC cleared contract volume is up 4% in March, so we're doing a little more volume. Nothing like a bull market to get everybody moving along. Options level bull market, and the month of March, really, we had kind of the seesaw. She started down, and we finished up, and that was about all we wrote.
In like a lion, out like a lamb.
Kind of. So I think from a trading point of view, there's, I don't see a lot on the calendar, although we are starting to dip into earnings season. I know Alcoa is coming out. I think it's next week, right? Is it like the 9th? It is the 11th. And that will kick off earnings season. So that's a week away. So we have kind of a, I'm just going to say it's kind of a dead week, except for the randomness that can happen out of maybe the EU or Japan with more bad news, or China, or oil prices going down. That's kind of our sort of trifecta of unfortunate and unhappy news lately. It doesn't look like domestically we have a lot of bad news. I don't know. Do you think there might be anything in the elections? I know we have the New York primaries coming up. Do you think any of that is really going to do much to the market at this point?
Yeah, it could. With the Republican Party, basically, there's uncertainty over there. If I were a betting man, which I'm not on elections by any means, but I would still think that Trump's going to get the nomination. And I think that's kind of what the market thinks too. Where the uncertainty could come in is if just for some reason Sanders or Cruz just had a random surge in their popularity. That I think could be some uncertainty, but I would venture to say that from the election side of things, people are expecting it to be a Trump-Clinton election. And if we get anything other than that, I could see some monkey wrenches thrown in, but that's kind of what I think people are thinking. And if we get something else, we'll see.
Yeah, I think InBet had Clinton a pretty prohibitive favorite. We're not really here to talk politics, just maybe how the market sees it. And, my kind of a rule with the stock market is they kind of like a sure thing. Whatever the sure thing is, if they're used to it, they think, Hillary's, whether you like her, don't like her, whatever. But option stocks like they like certainty. The more certainty the market can look forward to, generally the more we rally. That's always been at least what I've seen. So, and last but not least, okay, just to have to just chuck this in, Tesla. Tesla now, the reservations for their new car has topped 276,000 cars. They started with 100,000 cars last week. The stock got a nice pop, and now they're up to 276,000. So kind of over all expectations, but I have to say, but we've said this before, with the stock trading, at some multiple in the future, which I still can't quite figure out, they had a nice little rally today up $10 to 247 closing. So does Tesla get you rocking and rolling at all, besides just wanting to drive one around St. Charles or maybe on your next trip to St. Louis? by the way?
I got like 4 of them in the spare garage, so it really doesn't excite me too much, but not really. But no, Tesla just reminds me, it's like a modern day Amazon. Amazon is cool. I love Amazon. I think Amazon is the greatest thing since sliced bread. Amazon could conquer the world if they really wanted to, because they're that good at what they do. But it took them a year. I mean, they're not known for making ginormous profits by any means. And it just seems like for years we'd always say Amazon's a great company. They keep getting more subscribers. They keep doing new things. But when are they going to make some money? I think Tesla's kind of the same way in that they're not necessarily trying to be profitable, but they continue to grow. They continue to be cool. And they continue to do some great things with what they're doing with their cars. With gas being at $2 a gallon again, I still don't see the need for I shouldn't say I don't see the need, but I see it's not like people are looking for electronic cars to save money on gas. Typically, the reason people buy a Tesla is because they want to be cool. They're rich. They want to buy a Tesla. And that can be a very, very, very powerful thing in the American marketplace. Just look at the iPad, look at the iPod. So with all that in mind, I think that's kind of how Tesla is, but it's still going to be a little while till they make a little bit of money.
I agree with that. But they seem to work very well on whatever the next press release is going to be. It seems like a press release trading company, and for right now, the one thing too is the short interest has been very heavy in it, even when it was a $23 stock, and it has not, that short interest has not let up, so it makes it prone to spikes and squeezes, and that's basically what we have again. So certainly the numbers look pretty good coming out of Tesla. Just whether they can maintain that market value. I'm still thinking buy the rumor, sell the news, but so far the stock really hasn't. It still kind of runs straight up from its last earnings report.
Yeah, don't sell anything with that.
I know you got to be careful. And I think with that, I think we can close this episode of the Trading Block, and maybe we should fire up the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
And hello, everybody, and welcome to the Odd Block. This is the portion of our show where we jump into the dark underbelly of the options market, see what all the big paper is doing, try to figure it out what's doing. We might have a couple of questions from viewer mail on this. But again, and I think this is one thing is with option activity, it's kind of a game theory thing where, if somebody goes and buys 100,000 calls, it probably changes the odds a little bit in what's going on. So with that, it's certainly worth taking note of, because you never also know what they're going to position behind the paper. And with that, we are going to look at Nike, ticker symbol, we all know NKE. And they are down today, down $1.88 to $59.71. Nike's at the higher end of the 52-week range. So what happened in Nike today? Well, real simply, we had call buyers. Nike was down to $1.62. They reported earnings last week. And someone came in and bought the Nike July 62.5, 65 calls. They paid 98 cents for the spread 5,000 times. When we reported it, the ADV is around 30,000 contracts a day. The open interest on this spread is right around 3,000 for the 62.5s and 8,000 for the 65s. So, high probability, of course, that this is an opening transaction. And total volume on E-Strike actually was up to 10,000 contracts, with the long leg paying through the offer. So at the time, I think the offer was 225, and that 5,000 lot, that the calls traded 226. So to get filled, the customer had to actually pay an extra penny for that size block. And it looks like a bullish trade in Nike for 2.565. As far as I can see, it might have been a cover to roll up. I'm not quite, because it's possible there were some contracts. The 65 calls, there was 8,700 open, but the reality is over 10,000 contracts traded on both strikes. By the end of the day, it looked like a lot of spread paper. So again, I'm kind of going with an opening call spread. Now the thing is, Mike, what do you think? Do you like an idea of paying 98 cents for a 62.5, 65 call spread in July? Is that a trade that you like?
Yes and no. More no. And the reason is that I think just doing, if you're doing a vertical spread, I either like to do them more shorter term or more longer term. And the reason I would do a more shorter term is that if I'm, and when I say spread, I'm talking about like a $2.50 spread with typically like about 5% range of the underlying. If I'm looking at something that narrow, I usually either think that it's going to move quicker than that, and I'd rather just pay less money and do it at a nearer term, or I'd want to pay a tiny bit more money, get a lot of time to actually make it happen, like maybe a December or something like that, and then just kind of put it in the drawer and forget about it. And if I see an opportunity in volatility or something along those lines, make an adjustment. But I would usually say 1 to 2 months or 10 to 12 months, with most of the time going with 1 to 2 months.
Yeah, I think another thing too is, you spend $1 for a trade like that, close to $1, and for you to make another $1 on it, you have to wait. How long? You have to wait to the very, very, very bitter end. So that's another thing that doesn't thrill me that much. You're already buying out of the money call spread, and to make money on it, you got to wait all that time. So I always prefer time spreads that, with a little more distance between the strikes, and you're just trying to pick something up. But anyway, not a bad trade, not a great trade, but somebody looking for a bounce in Nike nonetheless. So I know we have a lot of guys, not a lot, but many clients in our chat room at Option Pit kind of do like Nike. So we actually try to price a time spread in there just for this reason, in case we had a pullback. Which you could buy in that short call, a couple of short calls right now, and give you a few more deltas for the way up. So to me, the stock kind of always goes up. For some, it's probably one of the more reliable big cap stocks there are. So anyway, probably a buying opportunity, but we'll see how Mr. Call Spread goes if he makes any money on his last one. Makes any money on this one, that is. Second up, this is a trade we haven't heard for a while, or a name we haven't heard for a while in the odd block. This is a KKR Company, the purveyors of, just buying companies out. That's what they do. They've been doing it since I was in college, and KKR has been having, 30 years at least, 35 years maybe. Maybe more, closer to 40. Oh my gosh, those guys got to be getting old by now. Anyway, it hasn't dimmed their star very much. So KKR is down 10 cents to 14.25. It's about in the middle of the 52-week range. The spread I saw was an April-May 15 call spread for 30 cents. They traded 3,276 of the April calls and 4,591 of the May calls. Again, went up on the Philadelphia exchange. Like we said, Philly leading the exchanges now. The CBOE is a close number 2, but Philly still leading the crossing exchange, I guess. And what it looked like they were doing is that the trader was closing the April calls because the open interest is over 5,500 there, and moving into the May calls. So they close the calls for nickel, and then they move into the May calls for 35 cents, so net 30-cent spread debit on the spread. So I'm guessing they want a little upside in their KKR, and KKR has pulled back a little bit from some of the highs, maybe because of interest rates. Who really knows what the story is, but it feels like somebody's picking it up at kind of the low end of the range and looking for a bounce in this thing. So what do you think about rolling to the May 15 calls if you were long the April 15 calls already?
Just need another. Yeah, if someone's just looking for a little bit more time, I could see that, especially if it's a 30-cent roll. One of the things that I always tell people is not to try to be a perfectionist trader. Someone's sentiment of KKR is still bullish, and if they think that they need more time to do it, they're willing to pay 30 cents with which to do it as well. Now, granted, that's still it's still out of the money. But if KKR does get the $3 move with which they're hoping for, 30 cents doesn't seem like such a bad idea. So I think this is just a simple version of rolling it out, trying to get more time based on the belief that it has greener pastures ahead.
I like that. Greener pastures ahead for the most successful buyout guys on the planet. I wonder how green their pastures are, actually, whether on their massive cattle ranches in Ireland or whatever. Those guys probably have. Anyway, next we have some calls trading in Reynolds American. This is Reynolds, the old, I guess it's RJR Tobacco. What is that, the Marlboro Man? Oh, no, that's Philip Morris. Reynolds, what are they?
Joe Camel, I think, aren't they?
I guess they're Camel. I guess they are Joe Camel. Shows you how much I know. They're all cigarettes to me.
They're all nice, good, moral companies, right?
Exactly.
By moral, I mean the opposite.
They make a very healthy, all-natural product that's been keeping South Carolina going for the last 400 years. But
there you go.
All the people in South Carolina are totally offended at me. But however, in this case, though, we have again, and it's funny when you do unusual activity, you see the same trade. So in this one, our Reynolds American, which is RAI as the ticker symbol, is down a little bit today, 30 cents or so. So they're using, again, a strange ratio, 3,674 calls over 3,182. They're trading more May than April. And they're buying the April 52s for 55 cents, and they're selling the Aprils for a nickel. So they're paying 50 cents for that spread. The MO, no pun for Philip Morris, is remarkably the same as the KKR trade. So my sense is this is a customer where I think they bet on a bit of a rally. They didn't get quite the rally they wanted, and probably are some. I'm going to say KKR is probably, you could say it's a blue chip private equity company. Reynolds, obviously, Joe Camel is a blue chip cigarette maker. They pay a good dividend, and they were looking maybe for a little bit more of a bounce. They didn't get it with the April contract, so they're going to look for it in the May contract. What do you think about that? What do you think about paying 50 cents for the 52.5 calls in May in Reynolds?
Well, if they believe it's going to go up, then you're right. I think it's very similar to what's happening with KKR. You're going to need a rally to make this happen and make this work in the best possible way. But if you feel that it's going to go higher, then a lot of times what's hard for a premium buyer is that you run out of time. Even though the stock just kind of isn't going down, it's not going up quite fast enough for you. So this is what the opposite is of a premium seller. Let's say you're just selling a call or selling a put, and the stock goes against you. You have to roll it out because you just need more time for it to expire. or something along those lines, or you need to hedge yourself, whatever method you choose. This is what premium buyers go through, in that they ran out of time, but they still have reason to believe that the stock's going up. So everyone's got to be stressed in some way, I suppose. And this is how premium buyers get stressed.
That is the thing. And I tell option pick clients, I go, you don't want to have the right idea but run out of time. You want to make sure you can afford to be short-term wrong but long-term right. And sometimes buying out of the money calls, and what we have is kind of a low vol choppy market right now, which is definitely what we did not have a month ago. Makes this strategy a little more difficult to get done. So we'll see. It doesn't mean it can't get up there. It doesn't mean they can't be a winner. Highs of the year are, we're literally trading near the highs of the year. So you gotta want these things to go up. That's all I can say. So with that, I guess we can close out this episode of the strategy block. I'm sorry, of the odd block, and maybe move into the strategy block with Mike Tosaw.
It's time to dispense options wit, wisdom, and education. It's time for the Strategy Block.
Hello, everybody, and welcome to the Strategy Block. This is where the strategery block, where I believe, what is it, a smoking jacket and a pipe, and we listen to Mike, and with one of his great, or what I would say too is very commonsensical approaches to trading options and strategery. So all I can say is, with that, Mr. Tosaw, take it away.
It's a bubble pipe, just so you know, and it's not champagne and steak. It is chocolate milk and pizza. That's what we believe in here in St. Charles, by gosh.
I like it. So what are we doing today? What strategery do you got for us?
I want to talk about the importance of know your exit before your entrance. And I've talked about this before in the strategy block. Let's just take a look at the stock. Let's say that I really like XYZ stock, and XYZ stock is trading at $10 a share. And why did I buy it? Well, I just like it. Okay, well, when are you going to sell it? Oh, I don't know. I just like the stock. I just want to hold it. Well, that's really a bad thought. Now, you need to have an answer for when you're going to sell it. Now, Warren Buffett's answer is never, most of the time anyway. And if that's your answer, that's fine. If you want to hold XYZ stock for the rest of your life, if you think it's that good of a stock, you think it's going to give you that good of a return on your investment, great. God bless you, and happy trading. And I'm not saying that sarcastically. I mean that in all seriousness. There's places in the portfolio to do such things. Now, here's where the problem happens. Let's say that you plan on getting out of the stock should you get a 10% gain. You want to get the stock to go from, we'll just say $10 a share to $11 a share. And as soon as it hits $11 a share, you want out. That's your price target. You believe it's going to be out. And you know what, I'm willing to risk 50 cents for it, so I'm going to put my stop loss, or maybe a mental stop loss, at $9.50. So you're risking 50 cents to make $1. How could I possibly lose? Well, here's how. This is the way with which most people do lose when trying to do this. Let's say the stock goes down to $9.51. And you're looking at your screen thinking, oh, man, I really still like this stock, but I don't want to get out of it now. And then all of a sudden you see the stock trading at $9.49. Well, it's a mental stop loss, so I'll get out of it. You don't get out of it right away. You slowly move your hand over to tap the sell button on your computer. But since you're doing it slowly, the stock bounces back to $9.51. And you're like, oh, well, I'm back in it now. I didn't really need to get out of it then. We'll just forget that happened. You kind of smile and move on with your day. Stock goes higher to $9.70, $9.80, and now $10.03. You're profitable on a trade that you were originally a loser, and you got lucky because it went below your stop loss target, your mental stop loss, and then it actually is now a profitable trade from the get-go. Good gosh, I think that's really smart of me. Thank God that I was actually at my computer to avoid such a problem. If I had just put a stop loss in, I'd have gotten stopped out. That's why it's important for me to be by my computer all day so I can control what's going on in the marketplace, because had I not been there, I'd be at a loss right now. But since I was there, whew, thank God, it's a profit. That's the mentality that oftentimes traders get. Well, let me tell you, that's dangerous, because here's what's going to happen the next time. Stock's going to go down to $9.51 again, because it topped out at 10.03, let's say. And keep in mind, this can apply to options, futures, whatever. I'm just using the stock for sake of simplicity for this for the strategy block right now. Now the stock goes down to $9.41. It worked last time, so even though you don't say it out loud, you still move your hand very slowly over to your mouse before you click on the sell button. You bring your finger up real slowly. Stock's at 948 now, 947. But just before you're going to put the finger onto that left click button to click sell, 951 print. Oh, wait. Now it's 951. It's above my stop loss. I can stay in this stock, thank God. And then the stock continues to go higher. It goes higher and higher and higher. The stock's at $10.10. Thank God I was by my computer right then and there. That's why it's important for me to be by my computer instead of doing these silly automated orders, because I would have been at a loss right now. Instead, I'm at the high. I'm making money. I'm 10 cents up on this stock. So you repeat this process time and time again. Stock really doesn't seem to go above where you're looking for it to go to. It never goes to that 11 mark. At least it hasn't yet. You've gone to 10.15, and then for most of the time, though, it kind of channels between maybe $9.80 and $10.10. But in reality, it's still not going where you want to go. So now we go down the slide again. It's making another run at the $9.50 mark. It's at $9.49. This time you don't even go slow over to your mouse pad, because you know it's going to do better. You know the stock comes back. It always comes back when it goes down to $9.49, because you have taken the horrible drug we traders all call hopium. And because you're on this hopium high, you don't just think it's going to come back. You know it's going to come back. But wait a minute. Now it's going down to $9.40. Ooh, you have that uncomfortable feeling that you get before you got into this trade on past trades when things like this would happen in the past. So you're at 940, but well, you can't get out now, because if you get out now, then that's admitting that you made another mistake. Initially, you said that you were going to get out at $9.50. It's $9.40. Why are you not pulling the trigger, you idiot? Well, I'll tell you why. Because if all of a sudden you mark it down in the books as $9.40, not only does it go down as a loss, it goes down as a loss and a sign of mental weakness, because of the fact that you're not using your original plan. You used a mental stop loss. You decided that it was smart for you to be at the market, to be at your computer, and to be able to make this decision going against your original rule and using the illusion that this bad decision was genius. It wasn't genius. It was luck. And on top of that, the stock during this time that I've been ranting and raving, now it's down at 925. Well, now this is just plain bad. We got a problem here, folks. It's 25 cents below your stop loss. You've taken the classes. You've listened to what Andrew has to say about following your trading rules, but you didn't do it because you felt that the stock was going to go higher. Now, another set of emotions comes into play. Now you've decided that, well, I'm in this deep. I'll just let it get back up to 950, get back to where my original stop loss was, and then I'll get out of there. So the stock goes back up to 950. You get lucky. Now, does that mean that you sell it at this point? Good gosh, no. Now, well, it's starting to come back. I want to see if this can happen because of the fact that you actually made the decision. You were smart. You made a decision during the day. You're a smart trader. You made the decision to stay in at 925. Now it's back at 950. You know what? It's still a good stock. I'm going to let it run back up to the $10 mark. So by all this time that's happening, it's 3 o'clock in Chicago. Trading's closed for the day. Next day, you wake up, you look at your portfolio. XYZ stock is down at $6.72. They had some bad news that happened overnight. And with that, on the bad news, your stock is not just a losing stock, it is a really bad losing stock. So now it's beyond the point of stupidity. Now it's beyond the point of making a bad decision. Now you just had a stock that went from a trade to a long-term investment, because of course it doesn't make sense to get out now. Then what happens the next day? It's no longer in the sixes. It gaps down again to the $4.21 mark. Well, you've lost over half your money. I'm just going to put this one in the section to where I think it's going to come back at some point. I'm just going to let it ride. You feel bad about things, and you decide that you're never going to let this happen to you again. But you can't tell anybody about this, because if you told someone about it, how stupid would you feel actually admitting the fact that, number one, you had a losing stock trade, because that feels dumb enough as it is. But number two, you let it get that bad. That is extremely hard to admit. And if you actually admit that to another person, it feels that much worse in your mind, when in reality, admitting things like that actually helps the problem from not happening again. So now you're going to start over. You're no longer looking at XYZ stock because you're just going to sit on that. You've lost over 50%. What the heck? Now let's look at ABC stock. ABC stock, similar scenario. You'd like to have it go from 10 to 11. That's trading at 10 right now, and we'll stop loss at 950. Once again, you may not have learned from your mistake last time, but still, you try it again, and that you're putting in a mental stop loss. And the cycle continues, and it continues, and it continues, and it continues. Folks, there's one thing that you can do if you struggle with taking profit. Let's say that the stock is above 11 and you have a hard time getting out. You can put in a trailing stop loss at that level. You can put in a collar to where if you have a hard time just stepping away from the action, you still want to be a part of it, but sometimes you lose what you've gained. You have a trouble pulling the trigger at that level. That's easy. Put on a collar, put on a stop loss. There's ways with which you can stay in the game, sell the stock, buy a call. You can do things like that. Where it's very difficult, and I mean extremely difficult, to do this is when a trade's going against you and you don't have the intestinal fortitude to get out. Folks, it is the hardest thing in the world to get out of a trade. Being in a losing trade is okay because you at least have hope. But once you get out of it, you got nothing. You're in cash. You're not going to make money on that trade. It goes down in the books as a loss. That's very difficult for people to accept, myself included. If this is you, I would highly recommend putting in some type of an automated stop loss, buying a put option, having something to where you're prepared for such an event. If it's not you, then you're ahead of most beginning traders in this business, and I congratulate you. Understand what you struggle with. Every trader and every human has various struggles. If you struggle with alcohol, stay away from a tavern. Same thing is true in trading. If you struggle with getting out when you're losing, put it in before you actually are at that point. Put in an OCO order, put in a stop loss, whatever you need to do. If you understand what your limitations are, we all have them. And unless God's listening to this show, which actually I'm sure he is, why wouldn't he? Then there's no one here that doesn't have some type of limitation of some sort. Know them, understand them. One thing that I'd always tell football players is know how to play when you're overmatched and know how to play when you're undermatched. What I mean by that is that if the guy that you have to block is bigger, faster, and stronger than you, you have to look on some of his old game film and figure out what his weakness is. Maybe you need to chop out his legs at times when you normally wouldn't. Maybe you know that if you aim more towards the right side of his body, he's a little bit weaker there. You have to have every possible edge with which you can if you're overmatched. Now, with that, let's say you're undermatched, meaning you know that you can just kick this guy's butt across the line from you. Well, if that's the case, you have to understand that, number one, you can't underestimate him because he may have been watching to see what your weak points are. You have to look within yourself to determine, okay, I'm really weak on this technique, that technique. And you have to know and understand that guy that you're way better than is going to be attacking those things in ways with which you normally aren't attacked in those areas. As a trader, understand what your limitations are and understand them from the standpoint of how you set up your orders, how you set up your trading plan, and everything with which you do. If you know that you're good at getting out when the market goes higher, That's great, but don't get cocky. He who exalts himself will be humbled. And if you know that you're really good at getting out right away when the market starts to go against you, don't be cocky about it. If you know you're bad at those things, adjust accordingly, as I just described. And that is the strategy block for today, Mr. Andrew.
That was an amazing strategy block. Amazing. That was very good. All I can say was having a good sense of getting out when you've just lost a little bit of money is the best thing you can do.
It's hard, man.
And it's hard. What I do is I say, okay, I'm going to buy the stock and I'm going to give myself a limit. Normally what I'll do is I will buy puts, and if I just buy the puts and I figure, okay, if I'm right, I'll just keep rolling the puts down as soon as they're in the money, because I know I'm at least covered on 80% or 85% of the notional value of the underlying if I keep doing that. Or I will buy puts on a ratio, so I'll buy 200 shares of stock and I'll buy 3 puts. So just in case, because to myself on something like that, if you buy puts against an equity and you're like, wow, those puts are so expensive, I'm never going to make that much money on the stock, you probably shouldn't be buying the stock in the first place if you can't make enough money to pay for your puts, because that means I don't think there's enough upside in it to make it worthwhile. But that's just if I buy stock in a trading account, that's how I would do it. But in lieu of that, you lose just a little bit of money and get out. And you know what? You could always get back in, but at least you'll have money to get back in with.
That's a good point. And folks, getting back in is one of the hardest things to do too, because that you have to admit you're wrong twice.
Right.
And you have to risk being wrong a third time.
That's why they have options. That's why I like Gamma.
That's true.
I don't have to think so much. However, I think with that, I just have to close. I think we should almost call the show. What do you think? Don't smoke the Hopium. What do you think?
I think that's pretty good. I try not to smoke it.
It's not a good drug to smoke. It's just not a good drug to smoke. Okay, and with that, I think we can do. We have this really long listener mail. Hopefully, we'd like to do it Thursday. There is one question I think here from Bruno that I thought that I would ask here before we kind of wrap up the show. He's saying unusual activity. There was unusual activity in CPD puts. The customer bought and the stock rallied the next day. And the stock rallied the next day. Does UA actually predict anything? The thing is, what I would say is unusual activity is interesting to see when that there is buyers or sellers above the normal, but you never really know. You really have to see if there are any blocks of stock attached to it. Some types of trades lend themselves to blocks of stock, and that just takes a little bit of time to figure all that stuff out. But I would have to say is just because somebody buys puts, and like I just said, puts in stock are one of my favorite positions. I learned early on that position has a lot of leverage. So it could easily be for somebody that wants a rally because, it's synthetically a call, and calls generally tend to go up when the stock rallies. And with that, we will close out our truncated version of the mail block or listener mail, and we will move into Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
Hello, everybody, and welcome to Around the Block. This is the part of the show where we look at what is up on our trading screens for this week, and besides besides maybe having all of you or some of you kick your Hopium habit, we do have a couple of earnings. But Mike, are you looking at anything in particular this week?
It's just a broken record for me in a lot of ways. I just keep looking. quotes on SPY between like 203 and 207 over the course of the last year and a half. I'd really like to see it do something. It was kind of nice, even though it was bearish. It was kind of nice in January and February when it was down, just to see something different happen. But I'd like to see something happen.
I know it. We are at that point, aren't we? Where, we either do we sell off so we get some more buying opportunities, or we actually rally to all-time highs again when the rest of the world seems to be struggling so bad. So I think that's where the market finds itself. As far as this week earnings go, Walgreens, one of my favorite stocks to own. Darden Restaurants, I think that's Sebastian's favorite restaurant. That is Tuesday earnings, Wednesday earnings. Bed Bath and Beyond, Monsanto and Constellation Brands on Wednesday and Thursday. We got Rite Aid, CarMax, and ConAgra. Sometimes ConAgra can be slightly interesting, that the options are trade ridiculously cheap sometimes in the earnings. Also this week in the market, we had factory orders today. There's some trade numbers, FOMC minutes on the 6th, and jobless claims on April 7th. Myself, what am I looking at? I'm looking at some time spreads, ratio time spreads, where you buy like 4, sell 2, things like that, and names that have the potential to move. I'm not expecting a whole lot. I'm not expecting a whole lot out of volatility. But at the same time, I'm not what I would say a net short Vega, meaning I'm not, I don't have negative Vega numbers, net for the option positions that I have, just because VIX is kind of low. It's probably just going to sink and decay a little bit more. But as long as I have some positive theta kicking in somewhere, I don't feel so bad, and having a couple long contracts around probably won't be so bad either. So with that being said, I think I can close out around the block. And what do you got cooking here, Mr. Tosaw, for all of our listeners coming up?
We got just a little over a week left until tax day. If you haven't filed your taxes as of yet and you want to talk about the IRA ideas, get in touch with me ASAP, and we will talk. You can still make a contribution for 2015. If you haven't filed your taxes as of yet, give me a call, 312-212-3531, or shoot me an email at mtosaw@rcmfs.com.
All righty. And that with us, we just had a Saturday class, Option Pit. We had our Saturday class, which you can purchase if you so choose. It was on diagonal spreads, kind of a more advanced class. It was very popular. We will be doing a class on basically basic portfolio management, using puts, selling calls against positions, learning about rolling your puts against stock. And especially with the vol this cheap, protection is very cheap. So if you're going to do it, if you're going to think about buying puts, I think of it this way: you buy puts and nothing happens, that probably means the equity is running off to the races. So that would be a nice thing. And with that, I guess we'll wrap up this episode of the Option Block. Thanks, Mike, for dropping in. I will thank myself for co-hosting, and we will thank Mr. Longo. I'm sure he is drinking a frosty beverage in some faraway Caribbean paradise. And with that, everybody have a good day.
preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.